Hey everyone, welcome back. So again, I'm with Andrew Craig. Well, this is part 3, and we're going to be talking about crypto, gold, and meme stocks, and just things, I suppose you could say, a little bit more spicy when it comes to investments. So this is what part 3 is about. So my question is, with the meme stocks, people have made money, and something I'm aware of is people want to make money quicker. So, as you say, you talk about the stock market being long term, and it is more proven, and I'm a real believer in that, if you invest for the long term, you have a much higher chance of ending up wealthy and financially free and living comfortable. Yeah. But there is so much now where people are making a lot of money quicker. Yeah. Is there a transition now where we might go from, it doesn't need to take 40 years, because people don't want to wait 40 years. People are seeing it, all right, okay, overnight, but it
doesn't have to take 40 years. I mean, I think it does have to take 10, 15 or 20 years, unless you're earning an enormous amount of money. But I mean, there are lots of things to say about that. I mean, at the end of the day, and the evidence is very, very clear, this never lasts. I sat watching people making 20 grand a week in 99, 2000 in .com, guys who were 10 years older than me and had more disposable and were buying every .com known to man. And most of those people lost everything, right? And so the idea that, I've made, the problem is anybody who has the philosophy or the mindset that means they've made very super normal returns, like thousands of percent or whatever today, and they're like, it's easy. I've made $1 million out of GameStop. When do they take the money off the table and put it in conservative, long-run, prudent assets? Because they are philosophically incapable of doing that, because it's pure luck, and if they then have $1 million, they're going to go put it on the next one. So when the crash comes, which it will, unless the last 200 years of evidence is totally relevant, when in real terms these assets correct in a massive way, then you're swimming without any clothes on, right? And there's somebody who hasn't got to grips with the prudent long-run rules around how investment works is, even if they've got 10 million quid today, are very, very likely to not have 10 million quid anymore very, very quickly. So, I mean, the perfect combination is, if you've been incredibly lucky and you've made a whole load of money really quickly, then get the hell on and learn about all the stuff that we teach, right? Get on and learn about the long-run fundamentals of real investment. Because, I mean, I use an example in the book. There are over 150 ex-Premiership footballers who are currently in prison in the UK, right? And the reason for that is because, and there's this, have you ever watched Ballers with The Rock? Dwayne Johnson. It's the same sort of thing, like in the NFL and the NBA and American sports, is all these guys who make like ridiculous amounts of money, right? But then they have ridiculous spending habits and they never learn about finance. They never read one book on finance. So then they end up getting to a point in their life where they're not making 50 grand a week anymore or whatever. But they have this lifestyle to support, and they have mortgages to pay, the only investments they made is their mate Dave told them to buy 10 apartments in Dubai, which by the way have all gone to nothing and the project's fallen over. This is very real stuff, and so the only way that they can try and carry on making that sort of money is through crime, which is why 150 ex-Premiership footballers are in prison. And I'm sure that anecdotally, how often do you meet a publican, in some pub, wherever in the UK, who regales you with stories about how when they used to play for Nottingham Forest or what, which I know it's not in the Premiership anymore. I'm not very good at football, obviously, but anyway, my point still stands. Is it's analogous. It's this idea that easy win, quick money, fast money, it never lasts. I mean, the only way you're going to make it last is if you learn the really boring old manly fundamentals I'm talking about. Because this is the point I want to make: is every single one of those 150 blokes who are suffering in prison somewhere. Anybody who ever makes that sort of money, if they read one book and actually figure out, the nuts and bolts of how to invest that money in the stock market, they should be set for life. Yeah. They should be set for life for at least, if you're making sort of 100 grand a week or whatever for 8 or 9 years of your life, and you know what you're doing and you get that into the right investments, you will always be making a high 6-figure or a low 7-figure income for the rest of your life. Yeah. So few people do that. We were talking earlier about money is so much about your own personality. Like, there's a great book about trading by a guy called Dr. Van K. Tharp, who's a really well-known Trade Your Way to Financial Freedom. It's a cheesy title, but it's a great book. And he talks about the first chapter is like the number one ingredient in your success, you. Yeah. And you've got to know how to apportion between aggressive and defensive. You've got to know when you've had a winning streak and you should take it off the table. I personally don't want to involve myself with any of that sort of hyper volatile stuff. I mean, my big aggressive bit will just be investing in a few biotech companies that I think might cure cancer or dementia or provide robots for elderly care or whatever. Real economy stuff, companies that cure cancer will create billions and billions of pounds of real economic value, right? Because you create economic value by solving human problems or providing humans with stuff they need, want, desire, whatever. That is a completely different thing philosophically from, I'm really, really lucky and something I bought's gone up 2,000%, right? But biotech's still risky and aggressive because these companies fail clinical trials and they go bust. But that I'm willing to do. This other stuff I've got no interest in at all. The great untold story, as I said, from crypto Bitcoin going from 100 to 60,000 is all the people who've lost along the way. Even though it's done that, an awful lot of people bought it high and sold it low. Yeah. And panicked and then, well, shit, their wives hate them and do you know what I mean? You're never doing that again. And then what's even more corrosive and insidious about that is you're sitting there licking your wounds, having just blown up 50 grand of your life savings, which happened between 18,000 and 3,000, let's say, or any of the other times in the last decade where it's corrected massively. And you're looking at other people who've just happened to luckily now have made tons and you didn't, and there's no way you're ever doing it again because you burnt yourself. I mean, it's the emotional and psychological side of this is so important. Cool.
So the volatility there is what Andrew's explained, that if it goes up like a knife's edge, it's going to come straight back down. So what I want to add as well is, we spoke about it earlier, is you have to take into your own personal circumstances. Yeah. You can't be copying someone else because, yes, they've made a quick buck. If someone else is, let's just say, I use this example, if someone else is living at home, they've got no overheads, no dependents, and they've got 10 grand to spend, and you've got a house, bills and children, you're not in the same investing situation. Right. And in my opinion, I'm sure yours is very much the same, you're sure to lose if you follow someone else's path. So transitioning from the sort of the meme stocks and that, it's not sustainable, people are making money, but it's so high risk. If we now steer sort of, from talking about the Bitcoin and stuff like that, if we steer it into now something like gold as an asset, I know that I'm a big investor in gold. I know that you like your gold as well. What's gold's relevance nowadays? Because I know some people are really trying to knock it, that it's had its time, it's not keeping up. I see it very differently, I'm sure you do. But what's your take on gold in the economy where we are at the moment?
So gold is a store of value and an insurance policy against financial cataclysm, basically. It is not a racy, wow, look at... And so, I mean, the example I use, which sounds a bit spurious and weird, but, if you went in 50 AD into the Roman Forum in Rome and you wanted to buy a toga, right, which is what Romans used to wear, every day at toga parties, everyone knows what toga is. It basically, archaeologists and historians tell us it cost an ounce of gold, right, which in today's money is what, $1,800-ish for an ounce of gold today. Mm-hmm. So a really nice toga for a sort of rich Roman 2,000 years ago was an ounce of gold. How much does a really nice suit cost? I mean, here we're in Mayfair, right, up the road in Bond Street today. Yeah. An ounce of gold, right, give or take. And all that is an illustration of, it's pretty much the only thing in human history that has achieved that. I.e., it's retained. You could have, if you were some miracle of science, like what's that, the Highlander or a vampire who could live for 2,000 years. And somebody had given you an ounce of gold in 50 AD under Emperor Justinian or Hadrian or I don't know who it was, Caesar or whoever it was. Today, waking up in the middle of the night, unhanging yourself from your vampire boots or whatever. Sorry, God, I'm going random now, but your ounce of gold that you were given in AD 50 is still has the purchasing power. In that time, every single currency in human history, other than that, has basically failed. Seashells. So the word salary comes from the fact that Roman soldiers used to be paid in sale, salt, right? Their wage was in salt because you could cure meat and salt was valuable and you'd exchange it for fish and whatever else. So, salt, seashells, feathers, all through to Hungarian forints and dinars and like every monetary system, every type of currency, dozens and dozens and dozens of currencies all through history have basically gone to zero. At the end of, so we're now, is there an argument the dollar is now going to go to zero? Because we're in this sort of postmodern era and America's on the, arguably waning and whatever else. Maybe it is, and that's part of what the story that Bitcoin's telling. But I think I would rather rely in a store of value over time that's got a 5,000-year track record of actually delivering that than in Bitcoin, which doesn't. It's got a 9-year track record.
I just want to say on that, with the chart, if you actually go and look at a chart, it's consistent, is it not? If you were to go back over 100 years on a gold UK?
Yeah, so there's it's goldmoney.org, I think is the one. It's either goldprice.org or goldmoney.org. It's one of the two. It's got this great, it's got a load of charts at the top. You have to scroll down, and then it's got a table of gold's performance in every major currency. So like Indian rupees, euros, yen, Swiss francs, dollars, pounds, whatever. And the average annual performance is like 10, 11, 12, depends on which currency, going back the last 20 years, percent per annum, which, people who point-to-point evaluations of how the gold in dollars was 1900 back in 2011, it's only 1850 now and it's done nothing for 10 years. It's just not how it works, especially if you're investing in it every month regularly, because you're benefiting along the way. But the chart has done that, but the argument made by, again, gnarly old school sort of economists is that's not telling you that you've made 10% a year. It's telling you that those currencies are losing 10% of value a year, which is probably about right. So the gold price is actually telling you what fiat monetary inflation is, right? It's never a straight line. There's a lot of nuance to all this stuff, but broadly, you're holding gold because if you put wealth into gold today, in real terms, in number of stakes it can buy and forests, acres of forest you could buy if you wanted to have timber, or it broadly stores value far better than a pound or a dollar or a yen or a Swiss franc. So again, it's about volatility. So gold is much less volatile than crypto. So there is a compelling argument that crypto is trying to serve a similar purpose to. It's basically like, crypto futurists will say, well, the dollar is toilet paper. All fiat currencies, they're just being printed out of existence. Look at Biden's just done $6 trillion more of whatever else. So that, all other things being equal, is very bearish for the dollar. Own crypto. Yeah, that's potentially quite interesting, but gold is just a much more, again, a more boring pedestrian way of achieving that defensiveness without the enormous volatility of, gold is quite a volatile asset in terms of old school consideration, an old school asset, but it's not doesn't fall 50% in 2 weeks because Elon Musk tweeted something, So I know which one I'd rather have to serve that purpose within my portfolio.
That's what I talk about as well, and any conversation I've had is the volatility is not there. And one thing I like about gold as well compared to other assets is how quick it can be liquidated pretty much anywhere into any currency. So this is something that sort of I find that people overlook is how accessible it can be.